We will stand on principle, or we will not stand at all.
Hi everyone, we're here with Aleksander Berentsen, and we're gonna do another episode of Principle Discord in order to examine the principles that we see and the challenges that Aleksander has been facing also in both educating and putting your word out there. So how would you introduce yourself?
Well, I'm a professor in economics, economic theory in fact, but my main research area is monetary theory, monetary policy, and crypto assets.
Okay. So you are a professor at the University of Basel.
Yes.
We have actually the BIS just behind there, so you can kind of look at it and think things through as well. What do you see is the biggest challenge in educating the current students when it comes to the central bank activity that we have seen basically since 2009? I happen to believe that they're not really orthodox, and maybe some of the books are outdated. Things like negative interest rates, things like asset purchases, and a lot of people say that it's kind of like an experiment. So how would you approach this?
So one thing that I have to say, it's not so much unorthodox, because we have seen similar things before. For example, in Switzerland, we had negative rates in the 70s. QE, for example, is just buying some assets by issuing central bank liabilities. That's nothing new. Has been done since decades. What is really new is the size of the intervention, right? If you look at balance sheets, central bank balance sheets, they have tripled, quadrupled. And this is kind of novel. So I'm not aware of other times where we had such a rapid expansion of these balance sheets. And this is true also for negative interest rates. As I said, we had this before, but we never had it for such a long time. And it looks like now that we are going to stay at low, say at the zero bound or negative rates for a very long time. And there's little knowledge about the implications of such policies over a long time.
So, I mean, we have seen real rates also in terms of inflation, etc., that have been low and negative in history and before, like you said. But it seems like it's a complete paradigm shift, and we're going in uncharted territories, because I don't feel like the industry, the financial industry, really has a grasp of what are the consequences long term, like you see, but also the principles that are used in terms of monetary theory. What is the principle of money? Okay, and we do see I see kind of like a free competition of money that comes from private sector by trying to assess that problem with Bitcoin and with other new inventions that are trying to challenge what is money, or at least figure out what is money, which is a question that basically comes back. So how do you see this question of, okay, so what is money, and then what is the monetary theory that should be followed?
So now when we talk about the real rates, it's an entirely different field. I mean,
right.
Historically, it was the norm to have negative real rates.
Yeah.
Because just think about it, in the old times, one of the main problems of humanity was how to save.
Right.
Because once you did save, there was immediately somebody else who wanted the cake.
Right.
So you had to pay for defense, to defend your investments and stuff like this. And at the end of the day, people were willing to invest even though they had a negative real return. So historically, this is completely the norm. It's just recently, the last 50, 100 years, we also had spells with negative real rates, but I think the nominal rates, that those are negative, that's actually the novel, or relatively novel, not the real rates part of it.
So what is the implication? Are we here always seeking an inflation target, or are we supposed to look at negative real rates over the long term as a norm, and then essentially you have a fight between how you can protect your wealth, right? So is it that you can only protect your wealth by investing and eventually be pushed in the risk curve, or or can you protect your wealth by just using money as a store of value, or is that completely over?
I mean, money as a store of value was always kind of a bad investment. I mean,
Right.
because it doesn't pay any interest. So if you do this comparison, if you look at, say, you compare investment into money and investment into some real asset, money always loses.
Right.
But there are other nominal assets that you can invest. You know, if you go and invest into bonds or other stuff, then immediately that looks very different. But now we are I mean, one thing that people always forget a little bit is we are in a secular trend that started in the 80s. In the 80s, interest rates came down, and now this is a trend that took, it's almost 30 years old, or almost 40 years old. And that secular trend has nothing to do with central banking. We actually don't really know where it's coming from. It might be part of globalization, right? Part of globalization in the sense that suddenly you have these, millions of people that get rich, say in China, in other developing countries, but have a really bad financial system. So they all try to get their money out. They're flooding our system. And they're happy to take negative rates because they say, if I keep my money at home, it might be confiscated. So it's actually minus 100%. And I think that explains the trend, or say it's one theory about the trend. We don't really know with certainty why.
But I think you're touching on a subject, because it sounds to me like you're politicizing money, right? Both ways. It could be politicizing money on the sense that you have a central authority that decides, first of all, the interest rates overall, globally, but then also individually as a country, where you have theoretically a mandate where the central banks in the Western world are independent, supposedly, from the governments, but yet you kind of see monetization being made instead. So is there or is there not an independence of money?
I mean, even the Federal Reserve System, they cannot go against a trend like this.
Okay.
They cannot just say, okay, we don't like this, we put the interest rate at 10%. It's just not possible. So they, at some sense, they have some influence. The short term, they have some influence. But if there's such a, we call it a secular trend, something really big going on, which has nothing to do with monetary policy. They cannot they cannot go against it. It's not possible.
Right,
so in that sense, central banks are not completely, they're not the only one who determine these kind of financial conditions, right? Maybe at the short end, they have some influence, but at the long end, even central bank have no chance against these kind of trends.
I mean, ultimately, like you say, is kind of a market force, right? And so the market forces, as long as you want to distort them, they always win at the end, and there's new creative ways of figuring things out. But like you touch on a point like globalization, for example, is that a deflationary pressure?
I thought so. I'm pretty convinced about it. That one reason why we had these low inflation rates for the last 20, 30, almost 40 years now is because of globalization. I mean, firms used to have quite a bit of market power, right? Countries were kind of isolated, had, say, little trade. Some of these firms had even some, monopoly rights given by the governments. And of course they have, when they see demand increase, it's kind of easier to increase the price than to produce more.
That's right.
What they did. But now with this kind of competition that comes from everywhere, from China, from Asia and so on, this is just not possible anymore.
Also labor competition. And all sorts of things.
Capital.
So would it be correct to say that overall that secular trend could be a vastly, by and large, tending to deflationary pressure because of the comparative price? Now we see COVID, people working from home. Why would you pay Swiss salaries and not salaries in some other places? But yet the governments have a deficit. There is a pension deficit. There is all sorts of structural problems, and that would somewhat require inflation. So it's kind of like, in order to monetize the debt, which is really another form of taxation, right? So you have those two clashing, although it's much easier for a central bank, which, when you look at by and large, if I'm minimalizing things, the tool they have is to print. So they would just continue to print. And then comes the question of the moral hazard, right? Who should be in charge of money? Are we or are we not, and I'm talking very basic principles here, are we or are we not in a free market? And if we are, then why is it that the interest rate, which is the target rate, which is mostly the most important rate, is not determined by the free market, except for the long bonds, but now you see that there's artificial movements on there because there is QE and that long bond is being manipulated. I mean, when people say artificially low interest rate, it means what it means. It's artificial. So how can we assess that? Is there a separation of state and money, like there was a separation of state and religion, or is it all part of the same thing?
I mean, so there were many questions, but one thing that I want to put your awareness to
Yes.
is the inflation.
Right.
Central banks, since about 20 years, desperately try to produce inflation.
Right.
And they don't manage. They basically fail. Inflation is always below their target.
Mm-hmm.
So apparently for central bank, it's not so easy to produce inflation. And my definition of inflation is really you have a basket of goods and you see
so the CPI.
And not because some people confuse it and they think about asset prices and stuff like this.
I was going to go there, yeah, but
but for me, clear. I mean, if I talk about inflation, it's about this.
Right.
Central bank desperately try to produce inflation and then can't manage. So this you can also see. I mean, they are not almighty.
Right.
It's not going the way they want to go, but not that they produce too much inflation. They produce too little. From their point of view,
right.
I don't think this is a problem. That's my personal point.
Right.
But apparently, it's not so easy to create inflation. And for me, the reason is quite simple. And the reason is, in fact, they don't really print money. So what they do, they buy asset by creating new central bank liability. But central banks have a balance sheet. The assets are still in the balance sheet. At any point in time, they can take the money out of the system, the liquidity out of the system again, because they have these assets. And I think that's somehow a problem because the financial sector, investors, they know that central banks are not going to allow for inflation, run up inflation, I mean.
Yes.
So there is no reason for them to fear. That's why they're happy to hold these central bank liabilities and not doing anything.
That's where I was going to go to, because when you look at the CPI, okay, you're right. They failed at pushing the CPI higher, and even the trickle-down economics or trickle-down theory failed as well when it came to QE and so on. But the asset inflation, if you want to call it that way, that one worked. And the problem is the polarization of things, both politically and the disparities. It just creates more moral hazard by having those who have financial assets, who have everything, and the rest who don't. So it's a double whammy, if you want, because if you have money, not only your assets that you hold are increasing in value, pushed by central bank, but at the same time the CPI is not moving. So it seems like there is a moral hazard that can be created through those distortions, and I feel like those distortions are vastly made by central banks. So do you see what would be the solution in your view to really solve that problem?
I mean, there are going to get two issues. I agree with the statement that central banks have reinflated asset prices. And this was by purpose, and they managed to do this.
Right.
They really wanted to do this because, in particular, after the financial crisis, asset prices were so depressed that people felt really poor. And the threat was that because people feel suddenly poor, they lost kind of 2/3 of their asset value, that they start, saving and not consuming anymore, and the economy will be stuck for a long time in this kind of depressing state. So the goal of central bank was clearly we have to reinflate asset prices, and they managed to do so. Now you were mentioning something else, that this is kind of unfair because of distributional issues, but I think that this has very little to do with the central bank. This is a lot about regulation. For example, in the US, you have to be a qualified investor
Mm.
in order, which basically means you have to be rich if you want to invest in kind of non-standard assets.
Right.
And that's where you make the most money.
Right.
Right. But you have to have, I don't know the number, you have to have $1 million or $2 million in assets already and some income that you are allowed actually
To do your own trading. Yeah.
And everybody else can't. There are these similar notions are in Europe, where you also have limits, restrictions of what you can do in financial markets.
Right.
And I think that's for me, the big, distributional part, which is, but completely, this has nothing to do with central banks.
That is too regulated because some cannot participate?
Yes, you can't. I don't know how much money you have, but you can't buy certain assets.
But there's a lot of brokers and things like that.
Yeah, but what do the brokers do? They know that you can't participate, so you bring your money to the broker, he will take all the profit.
Yes.
That's the way it works, right?
Right.
So you have to go through intermediaries and they basically
fleece you.
That's
it. I get that. So let's talk about principles at a very high level. What do you think are the main principles that are into play when it comes to money today? Meaning, are we going to see a transformation of the idea of money, given that there is other sorts of free competition of money? Okay, so Hayek Bank type of thing, where you see private banks at the time issuing their own quality money, and really it hasn't changed much because you have the euro, the yen, the sterling. So you have those central banks who are basically competing in theory with each other to be a good currency or a store of value, knowing that you have a big dominance by the US. But then you see private money being created like Bitcoins and things like that. Do you think that's a sign of a seek for alternative from the private sector? Or in other words, today it seems like most central banks are doing all the same thing. And how far can they go? Because if we push it to the extreme, cannot they just buy everything then, all of the assets, and then own them? Or just, is there a limit where at some point there is no trust in the money that they create?
I think first of all, I think competition is a good thing. I'm completely in favor of allowing, the private sector to issue its own money. By the way, it's already today like this, but what I'm talking is really about crypto assets, cryptocurrencies, which have different properties because there are no liability to nobody.
Right.
It's more like kind of gold.
It's like gold, yeah.
But what people sometimes don't understand, even today, 90% of the money is private money. So if you have a bank account, if you hold deposits at a bank account, this is a liability of the bank towards you. It's not central bank money.
Right.
The only form that you can hold central bank money as a household or individual is through if you hold banknotes.
It's cash, yeah.
Yeah. That otherwise you hold a private liability, but because they peg it to the dollar, the bank, so they peg the value of their liabilities to the Swiss franc. People are not aware of this. So it's already in some form we already have currency competition. It's just everything is pegged and everything is called the same. Everything is called dollar. Everything is called Swiss franc.
But the true dollar is the paper dollar.
The true dollar is the paper dollar, and then there are some lucky financial intermediaries that can have an account at the central bank.
And they do fractional reserve and
exactly. And these reserves that they hold at the central bank, they are also central bank liabilities. Is also kind of true money.
Correct.
Yeah.
But since you touch on gold is an asset that is nobody else's liability when you see it on a physical form. It's there and it's in nobody else's balance sheet. Everything else becomes kind of an entry in a ledger in some book, right?
Well, the bit, I mean, if you think about Bitcoin, it's based on UTXOs, but it's very similar to a ledger.
Right.
Or Ethereum is really account-based. I don't think the question is whether it's account-based or something else. The issue is whether it's a liability to somebody or not a liability to somebody. So all these crypto assets
Right.
that are, basically created are typically no liability. You cannot go and say, hold a Bitcoin and go to somebody and say, oh, give me back my money. It's like gold, right? The same is for Ether and other crypto assets. And I think that's a very different type of money, but I think the distinguishing factor of Bitcoin or Ethereum and other crypto assets is they're basically censorship resistant, right? You hold them, you own them. It's like a piece of gold. You own them, you hold them, right? If you have the private key, it's only you can move them around. Nobody can prevent you to move them around. So, once you hold liabilities in the existing banking sector, they can just freeze your account.
That's right.
They can just take it away. They can say, no, you can't pay this. We don't allow this.
So we saw this in Cyprus, right? We saw in Cyprus they can freeze your account on
this year in Lebanon.
Right. Exactly.
People wake up and suddenly the money is gone.
Right.
Yeah. Or they allow you to take out like $20 per day or something like this.
Right.
And it doesn't matter whether you hold dollar or the Lebanese currency. It doesn't matter as long as it's in a bank account. They can shut it down at any point.
So liabilities are sometimes good because it's a commitment, but sometimes it's bad because if the other person on the other side chooses to default on the commitment, then something wrong happens, right? And then we saw that also globally when the dollar was unpegged from gold. We realized that the dollar was only an IOU, and then the IOU kind of defaulted on the premise, and then it becomes just.
But you also have to see, if something is completely unbacked, like Bitcoin or Ether, then its price is completely self-fulfilling.
Right.
Its price is whatever people think it is, right?
Yes.
So everything is forward-looking, and people basically say, oh, if I believe tomorrow the value of Bitcoin is, say, $10,000, then you're happy to pay $10,000 today. Right?
I'm a gold bug, right?
Yeah.
So
the gold is the same thing.
Because and ultimately it's all about consensus. And it's all about the trust you have, right? And then whatever the value is in the eye of the beholder.
But the trust you have is as others someday in the future
will accept it
for it.
Right.
That's the trust you don't.
So what's your long-term view on Bitcoin?
I mean, Bitcoin. I think Bitcoin has a clear use case. It's a digital gold, right?
Okay.
It doesn't have the history of gold. It has a very short history, so we will see whether humans coordinate on it and treat it like gold. But that's its use case. But what I believe, like Ethereum, has much broader use case, and I strongly believe that the entire financial system will move on Ethereum.
So it will use the technology, but
yeah, absolutely.
Okay.
Yeah.
I agree with you.
Once you play around with it, you see all the possibilities that you have, the advantages that you have by using this kind of system. I think the financial system will either move on it or will die. I don't know how long it takes. Maybe it takes 10 years, maybe it takes 20 years. It also depends how regulators are going to react to it and stuff like this. I think in India now they want to forbid it again, and so there will be coming and going. Like Lenin said, I think he said like something like 2 paths forward and 1 path back. But I'm completely convinced about this.
Right. So I'll tell you what I think about Bitcoin. Right. I think it's just kind of like a collectible. Right.
It's a collectible. Yeah.
So it has an OTC pricing. Right. And the issue is that when you see new technologies, it's never the first one that's the best one, right? It's not the first car that's the best car. But that doesn't mean that cars are no good, right? And I agree that the technology and the concept of smart contracts is a powerful one because it allows you to disintermediate and to have more efficiencies, automatization. A lot of people were talking, like, I think a couple of years ago about digitalization. Really everything is automatization at the end of the day. And I think I agree with you that we will switch into a system that is more transparent and at the same time secure with less intermediaries. And that would allow efficiency. But isn't that also a deflationary pressure?
I don't know what effects this will have on inflation. But I want to come back to Bitcoin. I'm a big fan of it. That I think many people say, oh, kind of it's slow, it's has some scaling issues and stuff like this.
Mm-hmm.
But I don't care too much about it. I mean, if it's for that particular use case, the only thing that matters is it secure?
Right.
And the Bitcoin developers, they move kind of slow. But you can trust them that they're not going to I believe so, I hope so, they're not going to introduce mistakes and stuff like this. And at the end of the day, if it's really gold, you're not trading gold on a daily basis. Maybe you make 2 transactions a year, that's it. Right? So that's why I think for me, that's completely fine. Now, with this kind of technology, blockchain technology, of course, we would like to have much higher throughput and other goodies. Now, these are the other projects, like Ethereum.
Yeah.
They're moving to Ethereum 2, some other. I mean, there are many new technologies coming up by the day. They do all the experimentation, and many of them will fail. But I don't want one to fail where I have like, I don't know, 100 million in it. Right? That's why I think it's good that Bitcoin is slow.
Right.
It's good it takes 10 minutes for a transaction, or 60 minutes if you have to wait 6 confirmations. And I think many people don't understand that. They say, oh, it's an old technology and there are better ones. Yeah, true, in some sense, in terms of throughput, how fast it is and stuff like this, there are better ones. But that's not necessary for that particular use case, where only safeties, it has to be secure. That's the only thing that really counts.
So what about central bank digital currencies, CBDCs? Are they, what are the biggest challenges for a successful CBDC in your view?
Okay, so the first thing I want to say before I talk about the challenges is, what people don't understand, CBDC does not need blockchain technology.
Right.
It's actually detrimental to it. First of all, CBDC is a central, it's a currency issued by a central bank.
So centralized.
Totally centralized. They will have a really tight control over it. You can issue it on a centralized database. You don't need this kind of distributed computer networks, or you don't need a blockchain for this. In fact, if you do it through blockchain, and you would do it through a distributed system, it just slows it down.
Right.
It makes it inefficient.
You're much better off with a Visa or a Master.
Yeah. And that's completely fine. It's a central bank, after all, that wants to issue its own liability, but in electronic form, not as cash.
That right.
So that's the first statement. Many people don't understand. Practically all central bank invest now time to do research in blockchain technology, distributed system. And I don't understand why. It's completely,
because it's an antithesis of their nature. If you take it from a primitive form of distributed versus centralized.
Exactly.
And so they want to use a distributed technology for a centralized system. I remember I had a conversation with someone where I said, but if everyone is on a Bitcoin, is it not everything centralized on the Bitcoin?
No.
So is it not that the danger at some point is that if you have a protocol like Ethereum that you mentioned, or any other protocol that really encompasses everything, then is it not now all centralized in this one system?
No. It's all about record keeping.
Okay.
So virtual money, we're talking about virtual money.
Yeah.
Right? CBDC is virtual money, Bitcoin is virtual money, fiat is virtual money in electronic form, requires record keeping. Somebody has to write the book, who owns what.
But so are you talking about private blockchains, basically?
It doesn't matter. So it's just a fact. Somebody has to note who owns what. And every transaction has to be noted in some form. Now the issue is who is the record keeper? In centralized systems, it's typically the central bank is a record keeper, the private banks are record keepers. They basically have the books, who owns what is in your account, when do you make a payment, they credit your account, they debit another account, and stuff like this. Now, what is really novel about Bitcoin is that there is no record keeper. There's no dedicated record keeper. That's the proof of work system, right? Where many people are simultaneously maintaining this database, which is called the blockchain.
Right.
And that's why it's censorship resistant. You cannot really attack it because there are hundreds, if not thousands, of nodes that are maintaining this record. And that's a decentralized nation. Even if everything is on Bitcoin,
So
it's still decentralized.
So do you think any central bank CBDC has a chance to compete against that?
Oh, absolutely.
So what would be the challenges then?
I think that the challenges are, first of all, most central banks don't want to change.
Right.
They basically think, no, the current system is fine. We don't need this. That's the main reaction. The higher up you go in the hierarchy. And the reason they do research on it right now is because they're kind of forced to. China is coming up with some CBDC, and then they fear this kind of thing. What happens if they really introduce it and then it's distributing worldwide? What happens to the dollar? What happens to the euro and stuff like this? Libra was another thing. Woke them up. Libra was like a call, right? And they're very reluctant to change.
So they will do it for risk mitigation, and they will do it by pressure.
By pressure, and maybe if the next generation of central bank leaders come to power, like in 10, 20 years, with a different set of mind, with different mindset, then they do it really, but because they want to do it. Right now, they're really reluctant. They say, no, the current system, they call it this two-tier system. It's fantastic. Why do we need to change something? That's the average view of a central banker.
So the challenge for you is first to decide whether or not you want to change.
I think the main look. It's very easy. I could introduce you CBDC basically overnight. There are no technical challenges to do so.
Right.
There's very little monetary policy implications, and so on. But the problem is if you don't, as an organization, if you don't see the purpose of it, then why should you invest? Why should you change something?
And it's a legitimate question, right? Is why would you use blockchain if you don't need to? If your principles of monetary policy, of centralized decision making is not going to change, there is no point in using anything that goes against that. But do you see that evolving at some point?
So what do you mean?
Do you think the mindset will evolve? Do you think
this is a generational thing?
So do you think the return of private money has its place in the future? Like in the sense of privately owned, like Bitcoin or gold, things like that.
That's not going away. I mean, they might start fighting it somehow.
Right.
But it's censorship resistant. You can't kill it. It's just going to. I mean, you can depress its price. Of course, if you tell people, I put you in prison if you use Bitcoin, and many people will say, I'm not going to use it anymore. So that will be.
But that happens with MP3 as well, and then yet people used it.
So I mean, it might have some price effects short term, but you can't kill that system.
Right.
I don't think that you can kill Ethereum or some other alternative systems. So they
will always come back in some form.
I think they will come back. They will stay, and if they react to it properly, also if they impose some meaningful regulation, I think it's a big chance, right? And I think the individuals should have the freedom to use whatever they want to use, and they want to make payments. I mean, I have colleagues at the Fed, in particular Fed St. Louis. They always say, we don't care.
Right.
We don't care. We know that people want to use the dollar.
Right.
We always face currency competition.
Right.
There is no law in the US that you can't pay, say, with euros, with Canadian dollar, or anything that you can have an account, you can do payments. There's absolutely no law. But as long as you as a central bank follow, issue some meaningful medium of exchange, people will use it.
Right. So for you, it's more about the technology is not going away. So you're better off embracing it rather than blinding yourself. Or
I think we should.
So Aleksander, in order to conclude, what would be your message to our viewers?
I think to the viewers, my message is we are living in a revolution when it comes to money, when it comes to financial assets. My message would be, don't miss the train, get informed, look into crypto, and finally buy this book, It's called Bitcoin, Blockchain, and Crypto Assets, a comprehensive introduction.
So we will put the links of the books and very interesting one, probably the best source, I would say, to get the information from, and also reliable ideas within the responsibility that comes of informing yourself is not making mistakes, and then the best way you can do that is by getting the right knowledge, right? So thank you again.
Okay.
Thank you for being here and answering the questions. If you have any comments, if you like this video, just like, share, and follow us so that you can see more of the content that we will put together. Thank you.